Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Morning, everybody. It's Cowboy, and it is Tuesday, 8:30 a.m. EST. So effectively, the live show week has begun, and we're taking a look at some wild price action with Bitcoin. I'm going to go ahead and get rid of some of this noise here from the older predictions that, of course, they're great predictions, but they're old now. Who cares? And the arrow here is pointing at a pretty interesting little bit of a bump. So what happened, right? All the talk about everything last week was all about, or I should say the last 2 days was about DeepSeek. And long story short, I think that this DeepSeek is not news per se for the smart money. I think smart money knew that there was going to be some compression due to the landscape changing due to DeepSeek because they came out last week. And any smart money knows that that's how it's going to be. So I think that they basically held price where it was going to be, and mostly with the indices. We'll start there. So like the SP 500, and in particular NASDAQ, that's the one that took the biggest dump. So when I first did my forecast on Sunday, the whole thing hadn't really come out yet. And as soon as the market opened, it gapped down quite a bit. So instead of going sideways, it gapped down and is now going sideways. And the question is whether or not that's going to be held up. And I did talk about how there are black swans, and in a sense, that's one of them. I don't think it's a true black swan, but they're going to allow it to affect the market as if it were a black swan, right? So what is going on with DeepSeek? To make it very simple, it's AI that's a lot cheaper, and technically it's even better. That's what I'm hearing, and the testing that I've done is that the AI is better with than ChatGPT, and they're using cheaper chips, and that's all supposedly. We don't know for sure, but according to who you talk to, depending on who you talk to, it may be that, okay, well, think of it this way. All that money that goes into the tech companies that are making AI, now they don't need as much money, right? So charging this much for ChatGPT, well, you don't have to do it. DeepSeek is free. It's open source and it's free. So a lot of money coming from consumers and even tax money going as investment into the AI world now appears to be unnecessary, and a lot of the market is anticipating that, and therefore we're seeing a drop. Now, there are some caveats to that, but in the end, that's the long story short as to why the NASDAQ indices dumped, and we'll go back to Bitcoin. It dragged down Bitcoin with it. Now, why would that be? Why would it be that Bitcoin goes down when, say, NASDAQ or SP 500 goes down? Well, it always has had a correlation. It doesn't necessarily follow, but a strong move to the downside in any of these major indices, mostly SP 500 historically, but NASDAQ as well. That would correlate with a strong move down in Bitcoin. And some will say that because they're both tech related, they're going to follow a similar path. I think it's more that Bitcoin is, believe it or not, made it into the mainstream. And I know this is controversial, but I'm pretty sure that the smart money has always had a decent amount of Bitcoin. I think they knew the future. I think they were telling us not to buy it because they wanted to buy it up. And that was like back in, 10 years ago. And in 2016 and 17, when, Warren Buffett called it rat poison, and I'm sure he still talks bad about it. But Jamie Dimon said he would fire anybody who was buying Bitcoin and all these silly things. Well, I happen to know that some guys in related companies to JPM were buying Bitcoin and laughing about it. They just weren't doing it in the US, and they didn't get fired. Long story short, very long story short, I think the correlation here exists because people have to cover their losses, right? So a lot of people might be selling off their Bitcoin to cover losses in other markets. And that's probably a good reason why a lot of things fell. I think gold even took a hit. You see there, that did happen. So everything is kind of taking what I thought would happen and compressing it downwards. Most things, the Forex markets that I predicted still seem to be pretty much on point. There you go. Actually, the euro took a hit. GBP USD being pretty true. USD JPY that grabbed and took a hit, but it's back to where it might have been before. Not my ideal, estimation, but still is in the range there. So what is Bitcoin going to do now, right? Now we have all this messy charts this week, all these crazy arrows going everywhere. I'm going to start getting rid of some of them because, well, no, not yet. We'll wait until Wednesday. Wednesday is FOMC, and that's an important day So as Wednesday comes, we might see the plunge protection team really kick into gear. We might not. I think we've already seen the plunge protection team start to kick in because here it is right there. Big move down on Sunday's open. And then Monday, the bottom was caught and price kind of held on until about the open and then pushed upwards. So that being the case, I think we're seeing the plunge protection team holding price up in most markets. And this is correlative again to the indices. Bitcoin, I think in this case is just following the indices, but you can take a look at NASDAQ and see that it got caught and it's at least being held up from falling too far so far. I don't know that they have enough power or money to stop the panic at this point. I mean, I'm sure they do, but they don't need to necessarily use it because they have the FOMC on Wednesday. Now, if the broader market is, let's just say, if the powerful want the market to fall, then it'll fall. If the powerful know they don't have the juice to keep the market from falling a little bit, then it'll fall. They will get positioned to either make money or lose as little money as possible when that happens so that they stay ahead of the rest of retail. And retail will just take the hit because retail is asleep at the wheel. And that's kind of the lesson here when it comes to how does institutional trade versus how does retail trade, because retail is just pumping 401k money into these indices while the smart money is doing a few other things that are a bit more complex, including trading on the derivatives side of things and hedging and all kinds of other stuff. So that is something I believe they're taking advantage of and even planning, possibly. It's just hard to say how strong the shock is, whether or not they truly held it off. No one's ever going to know unless you're really in those high circles. But what we can do is take a look at the algos to at least see what it looks like price wants to do. And I can tell you high time frame, price does still look pretty bullish. Mid time frame, though, it does look like it's going to have to go ahead and gather some steam before it's going to head up again. That was a pretty hard hit, and whatever bullishness existed on the daily got put a little bit on hold. So the question is, okay, is price going to go back into this 90 to 102 range, or is it going to stay above 102 and kind of float between 102 and 108? Well, as of now, right now, the price has come back up and is at 102.5. So it may very well be that it goes back and starts to follow my original prediction and stay strong. We are at a pretty strong time in the bull market, and it may be that Bitcoin perseveres. Time will tell. As it stands right now, there's a fair amount of bullishness that should keep it above 100, but it wouldn't surprise me terribly to see price dip a little bit lower. Where might it dip? Let's take a look. Hey, Brad, I'm good. How you doing, my man? Appreciate the shout out. Always good to have you. Let's go ahead and take a quick look at the Kingfisher, and we'll see if we can gather a little bit of data about the liquidations. Now, the Kingfisher.io is a great app, and you can use it for free. It's actually way better if you pay for it, depending on what you're doing. But if you're trading and you're trading crypto, I really recommend taking a look at this app. There is a referral link in the description that will save you some money. Now, the strongest gathering of liquidity here, the strongest gathering of liquidations, I should say, is down. The strongest single gatherings right at 100,000. So price may be tempted to go down there to grab those liquidations, but you do have a lot at about 104 and 105. Between 104 and 105, there's a strong block as well. So what happens with this and how it's used, basically, these liquidations are where price is going to want to go, okay? Where the spikes you see. And there's plenty of spikes elsewhere, but the close by ones are the ones that we look at. And the strongest spike is sitting right there at 100,200. That means a lot of people have gone long and their trades would liquidate if price goes down here. And a lot of people of the kind of people who have the power to move markets make a lot of money when price goes towards those liquidations. So if we do see a bit of a spike down in the algos, if the algos get even short-term bearish, it would be really easy to see a short-term move down to about 100,000. If that were to happen, that's price going from here to basically about there. All right, so maybe some scalps to the downside. If the algos continue to be a little bit bearish, that might be a nice move. I'm going to keep an eye out for that. And if I do take that trade, I'll be telling Algo Factory about that. And speaking of Algo Factory, we are going to head over to the private live lab. So what we do at Algo Factory is we teach people how to build their own trading plan, otherwise known as an algorithm. You don't have to know how to code or anything like that, But what you can do is extract money from these markets on a regular basis. We teach people how to trade like adults, right? We teach you how to build a system that has a predictable result based on very basic data science. You don't have to know any fancy stuff or have degrees, anything like that. We can show you how to do that regardless of your experience, right? And on top of that, if you have been a trader for some time, you're actually our prime audience. We're looking for you because I've helped a number of traders now, professional type traders, professional level traders, certainly people who trade every single day and have done so for quite some time. And I've helped them clean up their whole thing. And they didn't have to change their method. They just had to learn how to properly trade. And I know that's kind of a simple thing to say, but your current method, I don't care how good it is, it might be we got to work some bugs out of some other stuff. So come on over to algofactory.tech and learn how to trade like a hedge fund pro. And I'm talking about your portfolio here, but never forget,
join us or die.